Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Middlesex Water Company Annual Report. Middlesex Water Company offers a diverse range of services to its customers. The company's regulated segment provides essential water and wastewater services to residential, commercial, industrial, and fire protection customers through the collection, treatment, and distribution of water on both retail and wholesale bases. This includes regulated wastewater systems in New Jersey. In addition to these core services, Middlesex Water Company also operates a non-regulated segment that offers contract services for the operation and maintenance of municipal and private water and wastewater systems. This means that the company provides specialized support to other utilities and organizations in need of expert management and upkeep of their water and wastewater infrastructure. The company's operations are primarily concentrated in parts of New Jersey and Delaware, with a strong presence in Middlesex, Tidewater, Pinelands Water, and Southern Shores regions. With over 125 years of experience since its incorporation in 1896, Middlesex Water Company has established itself as a reliable provider of essential water and wastewater services to its customers. The company's services can be summarized into the following key areas: regulated water distribution, regulated wastewater treatment, contract operation and maintenance of municipal and private water and wastewater systems. These services are provided through two main segments: regulated and non-regulated, catering to both residential and commercial customers in New Jersey and Delaware. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what might cause a stock price to increase. The Middlesex Water Co. stock price has increased slightly over the past year due to several factors. One key reason is the company's consistent financial performance and growth in revenue. As a water utility provider, Middlesex Water Co. benefits from steady demand for its services, which translates into stable cash flows and earnings. This stability attracts investors seeking reliable returns. Another factor contributing to the stock price increase is the company's strategic investments in infrastructure development and expansion of its service area. By upgrading its network and expanding into new territories, Middlesex Water Co. enhances its capacity to meet growing demand, thereby increasing its revenue potential and appeal to investors. Additionally, the company's commitment to sustainability and environmental stewardship has also contributed to its stock price growth. As concern for water conservation and management continues to rise, companies like Middlesex Water Co. that prioritize these issues are seen as attractive investments by socially responsible investors. Lastly, the overall market conditions and investor sentiment have played a role in the stock price increase. A favorable economic environment, low interest rates, and increased investor appetite for dividend-paying stocks have all contributed to the upward trend of Middlesex Water Co.'s stock price over the past year. Middlesex Water Company maintains a market capitalization of $1 billion, broadly in line with the industry peer group. Middlesex Water Company trades at a higher price-to-earnings ratio of 23 times and a higher price-to-book ratio of 2.07 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 64% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 2.57%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline for the company can be categorized into several key areas. Revenue growth is primarily driven by the Middlesex system, which has seen a significant increase of $14.5 million in annual operating revenue due to base rate application. Additionally, the Tidewater system has experienced a $5.5 million revenue increase as a result of a DEPSC-approved settlement agreement. The company's regulated tariff-based water and wastewater utility services have remained stable, while non-regulated operation and maintenance contracts for services on water and wastewater systems owned by others are growing. Furthermore, the company has increased its debt financing through NJBPU authorization and private placement, resulting in an additional $260 million and $30 million respectively. The issuance of common stock has also generated net proceeds of $29.5 million. On the other hand, revenue decline is primarily driven by the Middlesex system, which has experienced a loss of $0.5 million in annual revenue due to PWAC rate reset to zero, and a loss of $0.9 million in annual revenue due to DSIC rate resets. The Tidewater system has also seen costs associated with lead service line inventory. The non-regulated segment has experienced a decline of 4.6% or $567,000 in revenue. The net income of the company underwent significant fluctuations between 2023 and 2025. In 2023, it increased by $10,827,000, representing a 41% increase from the previous year. However, in 2024, this trend was reversed as the net income decreased by $1,529,000 compared to 2025. Interestingly, there is no change in net income between 2024 and 2025. In terms of profit margins, the operating income margin saw a slight decrease from 27.7% in 2024 to 28% in 2025. Similarly, the net income margin also decreased from 23.1% in 2024 to 21.8% in 2025. These changes suggest that the company's profitability has been affected by various factors between these 2 years. The company's financial performance indicates a consistent trend of generating positive operating cash flow. The data shows that the net cash provided by operating activities has been increasing over the years, with a notable increase from $52,782 in 2023 to $62,596 in 2025. This upward trajectory suggests that the company is efficiently managing its operations and generating sufficient cash to meet its financial obligations. The steady growth in operating cash flow is a positive sign for the company's financial health. It indicates that the business is profitable and able to generate cash from its core operations, which can be used to invest in growth initiatives, pay off debts, or distribute dividends to shareholders. Overall, the data suggests that the company is on a solid footing financially, with a strong ability to generate positive operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past year. According to the extracted summaries, the debt level has consistently shown an increase. On page 24, it is mentioned that the debt level increased, while on page 35, it is stated that long-term debt increased by $26,052. Furthermore, on page 37, it is noted that long-term debt increased by 7.1%, and on page 53, it is reported that the debt level increased by $29.7 million from 2024 to 2025. In terms of interest expenses, there are mixed signals. On pages 22 and 23, it is mentioned that interest expenses increased by $0.3 million due to higher average debt outstanding. However, on page 26, it is noted that the interest on long-term debt has increased by $285 million, but it is unclear if this change represents an increase or decrease. On page 61, it is reported that consolidated interest expense increased by plus 2.3% from 2024 to 2025. Overall, while there are some inconsistencies in the data, it appears that both the company's debt level and interest expenses have increased significantly over the past year. The performance of various segments within the company's benefits plans has been analyzed. The pension plan experienced a decline in value due to a 1% increase in the discount rate, resulting in a loss of $9,066. Conversely, the other benefits plan demonstrated improvement with a decrease in expense of $547 and an increase in value of $4,846 when the discount rate decreased by 1%. These results indicate that certain segments are more resilient to changes in the discount rate than others. Management's outlook for the company is optimistic, with several key strategies in place to drive growth and efficiency. One of the main drivers of growth will be the expansion of the franchise area within the Tidewater system, which is expected to continue through organic residential customer growth. The company plans to invest $506 million in capital expenditures from 2026 to 2028, with a significant portion of this investment going towards replacing water mains as part of the Renew program. This program will cost approximately $12 million per year for 3 years and is expected to deliver long-term benefits to customers. In addition to investing in infrastructure, the company plans to pursue selective acquisitions and operate municipal and industrial systems on a contract basis. The acquisition of Ocean View's water utility assets is also expected to provide additional revenue and expand Tidewater's customer base. Management has also outlined a comprehensive financing plan to fund its multi-year utility plant infrastructure investment program. This plan includes using net proceeds from common stock sales to fund capital expenditures and other general corporate purposes. Overall, the company's strategy is focused on investing in growth initiatives while maintaining operational efficiency and delivering benefits to customers. The company has a history of paying dividends to its shareholders. This practice is evident in various sections of the report, including pages 12, 18, 36, and 38. On the other hand, there is no specific information provided on share buybacks. However, it is mentioned that the company has an at-the-market equity offering sales program and a conversion feature for preferred stock, which may be related to managing its capital structure rather than directly buying back shares. Concerns about inventory buildup or supply chain disruption are indeed present. The primary cause of these concerns is drought, which has led to overuse of underground aquifers and contamination of water supplies. This situation not only affects the availability of clean drinking water, but also impacts the production process of various goods. Furthermore, there is a potential for disruptions in the supply chain related to goods that could have adverse effects on operations, financial position, and cash flows. These disruptions can be attributed to various factors, including drought-related issues, which may lead to inventory buildup or supply chain disruption. That concludes the financial summary for Middlesex Water Company. Feel free to comment below, and I will be happy to answer them when possible.